Hello, my name is Dr. Aprill Harmon. I'm going to be talking to you today about how to become an owner with bad credit. I'm going to tell you a little story. When I was about 19, 20 years old, I had a dream. I wanted to start my own hair salon, and I didn't have any cash. I didn't have any credit, but I did have the courage to go out there and find a way to fulfill my dream. I found a real estate broker to help me find a location. I told her my situation and my budget. So she helped me find this building that had been abandoned for a while, needed a lot of work done, but I was able to negotiate with her. If I agreed to do the rehab on it, and she lowered the lease to $200 a month. So I gave her the $200 deposit, signed the lease. Then I had to figure out a way to do the rehab, which I had no clue at the time. I really had no plan. It was just like I kind of made it up as I went, right? But I was optimistic. I felt like I knew that I could do it. I didn't know how I was going to do it, but I knew that I could do it. I was in Home Depot looking around at paint and different stuff. One of the employees walked up to me who was also a general contractor and kind of asked me a little bit about why I was looking for all this stuff, what I was trying to do. And so he met me at the building. He gave me a quote. I gave him an explanation that I didn't have a lot of money. And because he was able to get the supplies and everything at an affordable rate, because he was an employee at Home Depot, we were really able to work out a good deal. And he also allowed me to pay him out in installments while he completed the work. Next, I had to find the equipment, which I had no clue. I didn't have any financing for that. And at that time, we didn't have social media and Google like we do now. So the only thing that I could do was look in the paper, and lo and behold, I found a classified ad where a lady was retiring, closing her salon and selling all her equipment. I met with the lady. I loved the equipment because it was the color scheme that I wanted. And I worked out an arrangement with her. I paid her every week so much until I paid the whole deal off, because she was selling everything for $3,000, which I did not have. But I had the courage, I had the optimism, and I had searched until I found just the right equipment, and it was enough for the whole salon. And we made an agreement, and I paid her out. It took me a couple of months. So it took, between getting the rehab finished and getting all the equipment paid off and everything, it took me like 3 months. And but I stayed motivated the whole time. I stayed motivated, and every extra dollar that I had, it went into investing in my business. And the outcome was, in 3 months, I had my grand opening and I fulfilled my dream of owning my own salon. So I use that to motivate you guys, because some of you may be listening to this. You may be out of cash. You may not have any credit. You might have even just lost your job. And you may be feeling like, you know what, how can I come back from this? My 3 success secrets of being a champion and being a comeback queen are: don't find an excuse, find a way. Whatever it is, find a way. Don't let a denial make you deny yourself from fulfilling your dreams. And don't let fear of failure stop you from trying. A little bit about my background. So I went from being a cosmetologist to now I'm a board-approved licensed clinical social work supervisor and board certified credit consultant, financial education instructor, a financial social worker, life coach. I'm a licensed real estate broker and accredited small business consultant. I own my own real estate brokerage in the Dallas, Texas area. And I have a human service theme because I really am on a mission to close the home ownership gap, close the wealth gap, help people to start businesses and sustain their businesses. My academic history includes a bachelor's and master's degree in social work, a master's in business administration, and a doctorate in leadership studies. And my dissertation research was on authentic leadership and money attitudes. I have over 20 years of professional experience counseling, coaching clients, developing leaders and entrepreneurs and proprietors. And I'm the author of Act Like a Pro, Think Like an Owner, which can be found on Amazon if you're interested. My objectives for this presentation is that you will learn different alternative financing options, that you will learn strategies to restore and build your credit, because you're going to need it eventually. So just because you don't have it today doesn't mean you're not going to need it in the future. and knowledge of different types of ownership. This is a very solution-focused presentation. We're not going to spend a lot of time talking about problems as to, why you don't have the money, why you don't have the credit, and all of that. We're going to focus on being creative, not just how you can borrow, but how you can be a lender and thinking like an owner. So really changing the mindset from being a borrower or a customer to being an owner, whether it's an owner of a house, a property, or a business. But you have to think like one before you can actually become one. So we're going to start there with ownership, right? First of all, there's 3 different types of property that I want to talk about. There's real property, which is what real estate is considered, real property. That could be residential, multifamily, commercial, land, industrial. There's different types of real property, okay? Then there's personal property. That's your cars, your antiques, your jewelry, cash, etc., furniture, all those good things. And then there's intellectual property. That's your patents, copyrights, designs, ideas, books, music, your personal creations. Okay. And I know you probably have heard people say, yeah, I own this. The title's not in my name. Why do people say that? People say that because a title is the legal way of saying you own a right to something. A title deed is the actual document that lists who the legal owner of a piece of property is. And the purpose of that is to protect owners, because you could give somebody your car and they could drive down the street and try to sell it to somebody else. But the person that's buying it, if they're a smart consumer, they're going to want to see the title to know that this person actually has the right to sell this, that they're the actual owner, right? It's the same way with real property or intellectual property. That shows who the actual owner is, so that the person purchasing it knows that, they're purchasing it from the right person, and it protects you as an owner. Okay. Now, there's different types of ownership, just like there's different types of property. And I'm not going to go into a whole lot of detail, but I do want to just show you that just when it comes to property, there's sole ownership, and that's where it's just one person, right? You're the sole owner. Just like in business, you have a sole proprietor, it's just you. Then there's joint ownership, right? And there's different types: joint tenancy, tenancy by entirety, tenancy in common. And these things kind of vary a little bit from state to state. But the idea is that it's more than one person that's owning the property, kind of like a partnership in a business, right? And then a trust is when you have set up a legal structure of some sort, whether it's an estate or something that's to manage or to dictate who owns this property, how it can be used, who it may be handed down to if you pass away, all those things. But it's spelled out in a trust, right? Property can also be owned by business, right? And so whether the business is a partnership or a corporate ownership, like an LLC or a S Corp or what have you. So all of those different types of business entities can also own property. So you can own it as an individual, be a joint owner, and there's many different variations of that. You can have it in a trust, so it's kind of like a family thing, or you can own it as a business. And the same thing with business. You have sole proprietorship, partnerships, limited liability companies, corporations, and S corporations. So you can have different types of ownership. Now, why am I bringing this point out? Because many times people who get in trouble, and I know this is my own personal experience, I experienced this myself, is because I was doing everything on my own. And there was a lot of opportunities where I could have maybe fared better if I had done some things like joint ventures or joint ownerships and things like that, or partner with someone, or even owned it in my business versus personally. So and many of you are in the same boat, and so I'm encouraging you, first of all, to understand that there's different ways that you can own, different types of ownership, and to consider that, before you just put it all on your own personal credit, right? Or you just go at it alone. You may want to team up with someone or structure things legally, right? So that it's less liability for you and less harmful to your personal credit, right? It leads me to the next discussion, which is strategies to restore and rebuild credit, right? Because that's why y'all are all here, right? Because you have struggled with your credit. You have bad credit or no credit. Let's first of all talk about credit scores. They're actually talking about what we call a FICO score. Now, FICO is the business name and registered trademark of a for-profit business that sells FICO scores to lenders, creditors, and other businesses that, you know, use credit to determine if they're going to lend to an individual or business or offer them financing, etc. It was formerly known as Fair, Isaac and Company, which started in 1956 by two men, William Fair and Earl Isaac. And basically, they came up with this algorithm to help lenders and creditors, etc., determine like how risky a borrower was, right? And so these businesses, then they marketed that product to these businesses, and so they buy the businesses. And so I point out again that FICO is a business. And your score is calculated by this formulary here. 30% is the amount you owe, right? That's the actual debt that you owe. That's 30% of your score. And then the payment history, that's, you know, how often, you know, if you're paying everything on time or if you're late, that affects 35% of the score. 10% is the credit mix. That's looking at, is it a revolving account, installment, etc. The length of credit history, that's 15%. And then new credit is 10%. So all of that together accounts for how your, you know, the makeup of your FICO score. Now, I want you to pay close attention to the fact that the amount owed and the payment history make up the bulk of your credit score. That 65% of your score is determined by those two factors alone. And the biggest of those, of course, is the payment history. So paying your bills on time or paying things on time, of course, is the biggest factor or number one factor, as you can see here. What a lot of people don't know is that there's different versions of FICO scores. Just like, you know, iPhone comes out with a different version every year or so, FICO has different versions, and they go from FICO 2 to FICO 9 is the most recent one. And the reason why that's important is because FICO scores, you know, depending on the different entity, for example, auto finance and mortgage finance and credit cards, etc., they use different FICO scores. So it's important for you to understand that you may apply for a car and get approved and then apply for a credit card and get denied. Or you may apply for a credit card and get approved and apply for a mortgage and get denied. And the reason for that is because there's different versions of FICO scores, and each type of lender or finance provider is looking at a different score. Now we want to talk about how we can restore and rebuild your credit. What are some strategies that you can use to restore and rebuild your credit? First of all, you need to check the credit report, make sure everything's accurate, dispute any errors that are on there, and you can do that yourself. If you can't do it yourself, seek professional help from someone who is actually certified, a certified credit professional. And there's different types of certifications, but I would advise you, it's my advice is to, if you are going to seek professional help, seek it from someone who's certified. Payments. Make a bill payment schedule. Contact your creditors to request a due date change if you need to, because you want it, you know, you may have to offset, you know, if you have all your bills due at the first of the month, you may need to call and make some arrangements to change the due dates to the middle of the month, etc., based on when your cash flows in. And then set a bill payment reminder in your calendar. I use my calendar on my phone and put alerts to it. That's very easy for me to do. It's what I personally do. But, you know, you can do whatever works for you. But the point is that you want to create an actual schedule and stick to it. And then if you can't stick to it, make adjustments as needed. Make contact, talk to your creditors, explain your situation. use your voice, because there are a lot of times, they're so used to people hanging up on the phone, hanging up in their face, not answering the phone. So they're happy to negotiate with you most times. You just have to communicate with them. Remember, they're in business too. Credit utilization. Keep your credit utilization below 30%. And you may hear different numbers there. Some may say below 10%, but 30% is really like the max. Like, you definitely do not want to go over 30%. If you keep it 30% or below, then you're pretty good in terms of, because they're not just looking at like if you're paying it on time, they're also looking at your debt to income ratio, right? So making sure you pay those credit card payments on time, the minimum payment due at minimum, is important. Why? Because missing a credit card payment can drop your score down like 20, 30 points. So you definitely want to make sure you make those payments, because they report very quickly and they can drop your score so quickly. So to rebuild credit, you can use secured or unsecured credit cards. There's credit builder loans that some of the banks or credit unions are offering now. They'll give you like a small loan if you're a customer there, and to help you rebuild your credit and report it to your credit, to the credit bureaus. And there's some other more creative financial products that are always coming on the market that you may be eligible for, but you want to look for those credit building opportunities that but I also want to caution you to just make sure that you understand interest rates. Make sure that you don't overdo it all at one time, because that can hurt you, because you may get overwhelmed. So you want to make sure that you plan this out, right? You plan this out. That's why I said strategies. You have to be strategic. But these are the ways that you can do that. And you may have to use a combination of these things, but you're going to have to do something to put a plan in place. Okay. And set SMART goals. Be specific. Ask yourself, what specifically do you want? Is it just to raise your credit score so that you can qualify for a loan? Or is it that you actually want to improve your finances? Do you actually want to create wealth for yourself? Because you're going to have different strategies and different actions that you need to take based on your goals, right? And make sure it's measurable. How much, how often, and not just broad, like saying I need to increase my score. How much do you need to increase your score? You want to buy a property. How much of a property? How much do you want to spend on the property? How many properties? Make sure it's achievable. Can you really do this? I want to make $1 million. Everybody wants to be a millionaire now. And I believe everybody can be, but you have to ask yourself, can you do it specifically? And if you can, do you need any help? What are you going to have to do to achieve it? You can be a homeowner, but what is it going to take for you to be a homeowner? Just because your friend bought a house in 3 months does not mean that you're going to be able to buy your house in 3 months. It may take you 3 years. So make sure that your goal, base it on what you can do and not what you see other people do. Don't be sidetracked by what you see on social media and all that. Make it personal to you. Make sure it's relevant. That's what relevance is talking about. Make sure it's relevant to your situation. Don't base your goals on what you see on TV, or you're looking at a married couple and you're a single mom. Make sure that you can achieve what you're trying to do. And time it, put some time on it, put a time on it. So that's going to help you not only measure your progress, but also keep you motivated. Lastly, we're going to get into alternative financing options. These are some creative financial strategies that you might want to consider. Earned income, right? You can always increase your income, and you can use that extra income to invest, whether it's in home ownership, business ownership, investing, or whatever you choose to do. But increasing your income is always an option. Check to see your eligibility for any special benefits that you might be entitled to. If you're a veteran, there may be some veterans benefits that you're entitled to. If you're a teacher, public servant of any type, you may be eligible for some benefits. So just checking to make sure and see what you may be eligible for. Private lenders. So there is more and more private lenders that are willing to lend to people now, and they don't necessarily look at your credit. They really just look at the fact that you have the down payment. Now, the thing about private lenders is they're going to want a larger down payment. You're talking 20% down, and there's going to be a little bit higher interest rate. But the whole point of that is that you can, whether it's get the money to start your business or get the money to purchase property. And then the goal is that you're still going to work on rebuilding your credit, right? And then refinance once you get your credit built up where it needs to be to get a more affordable loan or more traditional loan if you choose to. But they're there to fill that gap, right? Then we have not what we call non-QM or non-qualifying mortgages, right? Those are check your eligibility for those. Those are kind of similar in terms of down payment and everything that you would see in a private lender. The only difference is these are typically actual mortgage lenders, but they offer non-QM mortgages, and they are going to be a little higher interest rate, bigger down payment. They may accept lower credit scores, but again, it's an option for someone who doesn't have the credit, and in a couple of years you may be able to refinance. And that's the whole goal. You always want to continue working on your credit, even if you get a private loan or a non-qualified mortgage, so that you can get a more affordable loan, right? Because that increases your cash flow. You can also wholesale property to investors, and that's where you're not buying the property. You're pretty much finding properties and referring them to investors who have the money to purchase them and rehab them. And you may make what they kind of like a finder's fee, if you will, and you can use that money to invest or build up your credit or pay off some debts, whatever you need to do. And then lastly, there's owner financing, and that's where you actually it could be seller owner financing of the property that you're trying to purchase, or be third party owner financing, which is similar to private lenders who will purchase it and then sell it to you, and you still would close at a title company. You always want to close at a title company, no matter what type of lender that you use. Go through the title company, because a title company is going to make sure there's an attorney there. They're going to look at all the documents, and that's just another protection for yourself. A loan processing company is going to take care of all the payments and everything. So again, it's just that you're not using a traditional lender. But again, the whole purpose is that in a couple of years, you're going to refinance and get a better interest rate and a more affordable payment. Other options are lease to own. There's a lot more third-party lease to own companies that are purchasing the properties. They give you 2 or 3 years, you lease it. A portion of your payment is typically, kind of goes into like a little escrow to help with the down payment when you are ready to purchase. Again, the same concept is that you're still going to work on rebuilding that credit 2 or 3 years, and then you're going to be able to qualify for a mortgage, right? So these are not long-term strategies, but they give you enough time to rebuild that credit, right? There's also grants available for down payment assistance, some community development grants. And it varies by jurisdiction. So you want to look and see, what grants are out there to help you to invest or purchase property. You can also consider what we call JV partnerships or joint venture partnerships. That's where you partner with someone else, pool your resources together to invest, and then share the profits, and continue to do it until you build up your cash flow. It reduces your individual risk because there's shared risk, right? And typically there's going to be someone there that may be more experienced than you, so and can help you. You can also bid for contracts with the government, right? That's you may have a business, for example, and you want to expand your operations. Consider contracting with government entities, and that can be any jurisdiction, local, state, or federal. Create something, create a product or a service that people need. Fill a need that's not already being met. And then there's microloans for small business loans that are typically offered to underserved businesses that may not have the credit. They typically, may require you to do some extra things, take some classes and things like that, get some business counseling or consulting. But they're there usually smaller amounts, to maybe help you with some cash flow and things like that. So you have to search these things out. Where do you find private lenders? These are frequently asked questions. Where do you find private lenders? Search it out. The best resource that you have are professionals who work in the profession, right? Ask lenders. You can ask traditional lenders for referrals to private lenders. You can ask realtors. You can ask real estate brokers. You can ask investors that are already investing. Because they're going to typically have someone that can connect you. Another place is to also join a real estate investing group in your area. They're usually free to join. They have meetings, and typically you're going to network with, there's going to be investors and lenders, a lot of private lenders and hard money lenders and things like that can help you or connect with you. Should you pay someone to fix your credit? This is a question that comes up. Again, that depends on you and your skill set. If you can do it yourself, do it. If you need professional help and you know yourself better than anyone else, then definitely get a professional. But I, again, encourage you to get someone who is actually certified in whether it's credit counseling, consulting, there's different certifications, but get someone who is at least a certified credit professional. And if you own a house, but it needs a lot of repairs, do you think I can sell it? Yes. A lot of people make the mistake of they're going to put all this money into repair and then sell it. You don't always have to do that because, there's people that will purchase it. It just really depends on where you are financially, but a lot of times also I see people that there's just, they let property go. And it's actually like it was something that was handed down to you and you may think it needs too many repairs. And so you don't have the money to repair it. So you just, let it go and you're losing wealth. And at the end of the day, there's people out there, there's investors out there that will buy it from you and fix it up, take it off your hands. And then, you make a profit off of it versus just letting it go and losing that wealth. And then there's also funds out there that may be able to help you to fix it up. And so, again, talk to professionals because they have resources for you to help you in all of these situations, right? Thank you for listening. Again, if you want to connect with me, you can connect with me on any social media platform at Coach Aprill with 2 L's. My website is coachaprill.com. If you want to reach out to me for any additional information, creative resources to help you overcome your credit issues so that you can fulfill your dreams, then feel free to reach out to me. And like I said, don't let a denial make you deny yourself of fulfilling your dreams.